What's up guys, Steve here. Welcome back to my channel. We're going over Turo and how to make it run as smoothly as possible. Now today it's kind of the basics. We're going to get into the Turo Insurance and what that means to you. I know it's pretty simple, but in case you guys have any questions, let's get into it. Okay, so down here on my phone, I just got it straight up to the Turo website. You share your car with the confidence, blah, 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 all the insurance. So they actually go through Traveler's Insurance, and we can actually choose a plan that works best for you. This does all determine on how much you're getting back from each rental and how much you will be forking out if something happens to your car. So we'll jump right into the 60 plan. You'll earn 60% of the trip price, right? You'll end up with that $750,000 third-party liability insurance. Turo pays 100% of the cost for the damages. There's no deductible by you. And this includes exterior wear and tear and reimbursements. Now the 60 plan also does cover loss of rental income and a car reimbursement up to $50 a day. This is while the car's out getting repaired. You may be losing out on future bookings and could do well depending on what kind of car you have and how long it might take to do these repairs. I will tell you honestly, the 60 plan, Turo is definitely making more money off your car than you are, but it may work in your favor depending on what car it is or what you got going on. I don't know too many people that are on the 60 plan, but let me know in the comments what you think. Is it worth it to you? Now the next one is the 75 plan. So this one, it's basically all the same coverages. Turo pays 100% of the damage costs above the deductible. Now your deductible at the 75 plan is going to be $250. So per claim, anything that happens, if you have 3 claims, say 3 different people hit something on each trip and it was just a bad month, now you're out that $250 per claim. So you're out that $750 for the month. This could be bad, right? You are getting 75% of the earnings for the trips. This does not include exterior wear and tear on cars like the 60 plan. So paint chips from rocks, this and that, normal wear and tear, it does not cover that. Basically the rule of thumb is anything under 3 inches, they're not gonna cover it. They're gonna consider that normal wear and tear. With the 75 plan and basically 75 on up, they do not cover your loss of income for future rentals if your car's out due to an accident. They do a $30 a day car reimbursement, and this is basically for those people that are putting their personal cars out on the platform to make money off of it, basically supplementing income, not making this a full-on business where they have multiple cars. Now I have seen and I've heard of Turo denying these $30 a day reimbursements because they know that you have multiple cars, so you got to be really careful with that. They kind of fine-tune how they want to go about it, right? They're in the business of making money, so if they can save a buck or two, you know they're going to. At the same time, they also put this on there as that little encouragement, hey, why don't you go for this 75 plan? They know that on average, if you're putting a car on Turo, you're not going to be needing an extra car if this one goes down. You're not going to be renting one because it's not going to be your personal car. For the most part, people are putting multiple cars on here and have multiple cars to use, so that way if one goes down, they still have another one to use. It's just one of those things that they make it look attractive to you. Do whatever you want to with that info, but it's basically kind of making it, hey, go this route so that way we make more money off your cars. Now that the 75 plan is done, we are up to the 80. Now you're getting 80% of the earnings, but your deductible is now going up to $750. You don't have the vehicle reimbursement for the time that it's down. You're not getting paid for the car's lost earnings, and this does not include exterior wear and tear. So as you can see, the farther up you get on this, you're actually having to pay a little bit more for those deductibles, as well as you're losing out on the car reimbursement and the loss of earnings reimbursements as well. And that's at the 80 plan. So now you jump up to the 85 plan, and now your deductible jumps from that $750 up to this $1,625, just from going up 5%, right? That's insane. These deductibles are really kind of a trip to me. Not really quite sure how they come up with all this stuff other than the law of large numbers. It's just one of those things that they go with. But now at this point, you're earning 85% of the trip's earnings. Does not include loss of host income, exterior wear and tear, all the same stuff, right? And then the top one that they have is 90%. So now at this point, you are making 90%. Turo is getting their 10% cut but now your deductible is at $2,500. So if you have a car that goes out and you get that $2,500 deductible, something happens, somebody gets rear-ended, and now you're paying out that $2,500. The car's still in safe condition and you're waiting on everything to go through to take it to the shop, and it's out on another rental, and something else happens in a totally different area. Now you're out another $2,500. So that's $5,000 in a potential 2 accident claim in a month. I mean, this could be bad. This is why I said make sure you have money stacked aside. Now with all this stuff, like I said, you still have no vehicle reimbursement, you're not having loss of income reimbursement, and it doesn't cover exterior wear and tear. So those are the main plans that you can pick. Obviously, if you do have commercial insurance and you want to go that route, that's a whole nother ballgame, because you don't want to have any claims within the first 2 years. Otherwise, your insurance rating just goes down the drain. That's the last thing you want. So you got to be careful how you go about all that with your insurances. Biggest thing I can tell you is the more cars you have, the more you can predict what's going to happen with your cars, how many claims you're going to have, and especially the longer you're on the platform. Obviously, if you're doing sports cars, exotics, anything like that, you're flirting with that risk a lot more than if you have a commuter. People are going to be wanting to race those cars. They're going to be, doing burnouts, all this stuff, and just that risk level goes through the roof, especially compared to the commuters. But that's kind of the risk and reward that you're going, and how you go about which cars you're going to want to use. Once again, the more cars you have, the more you can actually predict what's going to happen, so you can actually kind of fluctuate with these insurance programs and coverages and how much earnings you're keeping. For right now, I would just figure out what you need, what to cover your expenses, and what you're comfortable with, and go with that. I'm not going to tell you which one to go with. For me, it kind of fluctuates which car I have and which coverage I'm going to use on it, right? If I have the commuters that I know they do really well, I'm getting a lot more of that income. The nicer cars, depending on what it is, or if I'm brokering a car, I leave it up to them. I'll kind of give them suggestions on it, but what that risk versus reward is going to be, and go that route. Now, the other thing with this is a lot of the times you are able to go through insurance with the renter to where you're not actually paying that deductible and they just cover it. That's what happened with my Focus. That's what happened with my Accent. Multiple other cars, we've gone straight to the renter and they've been pretty good about it, and they just handle it. They make it happen and it gets fixed the way it needs to be done. Now, if you're able to do these repairs on your own, that's great. That's a little bit extra money in your pocket. If you're going to a collision center, then you can go to them, have the renter pay the collision center directly. You may not be making money on that end, but the car is getting repaired the way it needs to be done. With all this, yes, you do still have to have insurance on your car, above and beyond what Turo has going on each rental. So remember, Turo's insurance only covers the car while it's on that renter with that specific person. You still need your insurance for when the car is being, transported from car wash back to parking, or you're driving it personally. You still have to have your own insurance covering it for all of this stuff. The other part of this is I make sure I do not leave my personal insurance card in the glove box. I know we're supposed to. You're supposed to leave registration and insurance in there. Honestly, I just leave the trip insurance in the glove box, so that way they don't have any of my personal stuff there, period. I do know a couple people, they've left their personal stuff in there. There's been accidents, and then all of a sudden they're getting calls from their insurance company, their personal insurance company, thinking that they're doing insurance fraud because they had a bunch of different claims pop up. And that's the other thing you don't want happening, is you don't want them going through your own personal insurance. Turo's insurance is there for a reason, so make sure they're going that route. So hopefully this helped out a little bit, as clear as mud. Pick out whatever plan works best for you. Make sure you have your own insurance as well as Turo's insurance coverage. And honestly, go out there and make some money. Make it happen. Don't get too caught up in all the what ifs, and just have fun with it. That's all it is. It's fun. Go out there, make some money, y'all. Thanks for watching. Do all that stuff down below. Y'all know what to do. We'll catch you on the next one. Later.